So Andrea, we on our last video we introduced to our subscribers and those who tuned in the information about reverse mortgages. We had a very special friend of ours, Patrick Kerwin, educate our audience about the ins and outs of this particular product. But as you know, when it comes to these types of plans, one segment just will not do it.
Right.
You have to continue to educate. And so we're so happy that Patrick has decided to continue this interview to just try to hit on some of the other things and other complicated matters that you may be thinking about when it comes to a reverse mortgage. We know there's always pros and cons to doing these types of products, but you have to know what's right for you, and you can only do that by being educated. So stay locked in as we continue our discussion on reverse mortgages. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and confusing retirement process simple.
Absolutely, Andrea. And we do this by incorporating a team of strategic partners ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a comprehensive and holistic roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
And as I promised, we're going to continue to have this series on reverse mortgages, so those of you who may have some questions or concerns can really maybe get those answered in these particular educational videos. So before we do that, before we transition into that interview with Mr. Patrick Kerwin again, Andrew, what are the two rules that we always like to give everyone when it comes to retirement income planning?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
All right, so let's go ahead and speak again with Mr. Patrick Kerwin. Hello, everybody. Again, I'm here with my good friend, Patrick Kerwin. He's here to talk about reverse mortgages again. Like I said, hey, everybody, reverse mortgages are very confusing, but they can be a very useful tool for a retiree if they are actually a bit constrained to their retirement income sources. And so, Patrick, if you don't mind, go ahead and just tell us again who you are, and for those who may just be seeing this for the first time.
So my name is Patrick Kerwin. I'm a mortgage loan officer with American Advisors Group. You may have seen our commercials on TV with Tom Selleck. We're the -- providers of reverse mortgages in the country. And we also were probably in the top 10 on doing forward mortgages. So we do both. So I guess, in general, reverse mortgages are for people that are age 62 or over. So if you're in your 40s, you're not qualified. If you're 62, and that means both of you have to be 62, then you're qualified to apply for a reverse mortgage, and in addition to a normal mortgage. So you can do either one.
Okay, let me just pause for a quick second. So I just want to make sure that the audience heard that part. So, but if you're married, both of you have to be at least age 62 and older, correct?
Yes.
But if you're single, obviously you have to be age 62. You can get one if you're single or married, right? There's no requirement that you have to be married to get a reverse mortgage. Got it. Perfect. All right. Go ahead, Patrick.
So the real question is, why would somebody consider a reverse mortgage over just doing a normal mortgage? And, there's the two basic reasons are, with a reverse mortgage, we can loan you more money than a conventional. And with a reverse mortgage, you're not required to make monthly payments. So the payments you might have made just stack up on the loan, and you can pay them when you sell the house, move out, or wait until you pass on.
Mm-hmm.
For somebody with an existing mortgage, when they're retired, let's say they're paying $1,500 a month. If we can work out the numbers for you, we can put you in a position where every month you can still pay the $1,500 if you want, or you can pay just the interest, which may be quite a bit less, like $700, or you can make no payment whatsoever. And it depends on how much equity you have in your house. You may actually be able to pull money out to help supplement your income. So, but the first thing is, if we eliminate a mortgage that's $1,500 a month, you're immediately better off with $1,500 more cash flow each month. And of course, at that point, you need to go see Carson so he can help you decide what to do with it, to put it in your retirement account.
I certainly appreciate the plug, Patrick, of course. But I have a bunch of videos about me, so what and how I can help people. But I really want people to understand how you are able to get folks over that hump, because quite frankly, like you said, yeah, I work with a lot of clients who are trying to achieve a lifetime income, and sometimes they do come up short, and we look for certain other avenues in which we can help them do that. And I have from time to time mentioned this particular tool and have sent people to you to speak about this particular tool for their retirement. So can you tell us maybe how one may go into just getting a reverse mortgage? Like, do they have to take a class, or do they have to do, jump through any major hoops that would be, maybe a deterrent for people to go down, maybe something that may be intimidating for them to do? Is it really hard to get a reverse mortgage, or what happens there?
It's going to be pretty much like a regular mortgage. We're going to, you'll meet with somebody like me or talk to me on the phone, and I'm going to ask your name, address, and phone number, and a bunch of questions that are probably obnoxious. But, we're going to do a normal sort of loan application like that. With a reverse mortgage, one of the things you have to do is it's a loan that's insured by the Housing and Urban Development organization, part of the government. And so they require that you get independent counseling to make sure that you understand the loan, and, you're not depending on me to explain it all to you. And so there's like a 1-hour phone session that you must do to get counseling. And of course, we've got to appraise your home, and of course you've got to apply. So, once we make the application, it's kind of like applying to college. You're not obligated to go, just applying to see if you can get in. So we take an application. We do the counseling. It costs about $125. And then we order the appraisal. Appraisals cost about $625. Usually we can put that onto the loan. And so once we do that, we put it in the oven and it starts to cook. Now, of course, what that'll mean is they'll probably come back and ask you 5 more annoying questions, documents to give them, what it's like. And eventually, somewhere between 6 and 8 weeks, we'll be ready. And at that point, we'll call you up and we'll tell you what all the final numbers are, because of course, this loan is based on the appraised value of your home. And we won't know that until we get the appraisal back. But that's kind of what the application process looks like.
Okay. So no classes or anything. They can just, wow, that's interesting. Okay. So how long, does it take? About the same amount of time usually to get qualified for a conventional mortgage? I mean, literally, you can be qualified within that same day, but is that
now, qualified and closed are 2 different things.
But so we're talking, okay, so the qualification, you're taking us through the full closing process of the reverse mortgage, right?
So I usually tell people it's going to take 8 to 6 weeks to close the loan.
8 to 6 weeks. Okay.
Notice I said 8 to 6, meaning it's more likely 8 than 6.
Sure.
But, I've done one in as low as 45 days, and, others have taken longer. A lot of it just depends on the person's and the home's condition, and their situation. So there's no 2 alike. That's why, I encourage people to call me, and we'll have a phone conversation, and I'll ask you a bunch of questions. And then usually I'll come out and meet with you in person. And I like to meet with, if there's 2 people, the husband and the wife, because the wife's going to have a different set of questions than the husband. And nobody can think up all this stuff on the phone. It's just better to do it face to face. And I'll wear a face mask if you need to.
Good. But let me ask you this, because we are in that unique situation to where, like myself, I speak to a lot of my clients via Zoom call now. So are you able to speak with someone?
Yeah, we can do Zoom.
Good.
And we've done several with Zoom. But what I still like a face-to-face, because usually when I'm talking to 2 people, there's one of them that kind of knows about it and the other one knows nothing about it.
Yeah.
And they think up more questions if we're all there live together and there's sort of no time pressure. When you're on a phone call or even on a Zoom call, I don't know, it seems to add this stressful element that you don't really need, and so people don't get all their questions answered. But, we can do it anyway. And I've been vaccinated, so.
Yeah, there you go. Tell me this, what are some of the most common questions that you do receive, Patrick, when it comes to a reverse mortgage? I mean, what are the most common questions that you may receive?
Well, a lot of people say, oh, this is a trick to take your house. Can't be.
That's a good one. Okay.
We can't take your house. Now, the mortgage that you have now, they can take your house. If you've got a mortgage now, yes. If you default on that mortgage, they can take your house. With a reverse mortgage, they can't take your house. Now, they can pull the loan, which means you're going to have to sell the house and pay off the loan or go refinance it, with another mortgage, but they can't take it. They're not going to take your home with a reverse mortgage. The whole point of a reverse mortgage is so that you could stay in the home that you want to be in, the neighborhood that you want to be in until you pass on. So I had a call yesterday from somebody that says, oh, I want to fix up my house and then sell it. And I said, well, tell me about your house. I said, is it in a safe neighborhood? Yes. Do you like the neighborhood? Yes. Do your grandkids ever come to visit? Yes, they come all the time. And there's a park across the street. And there's a pool down at the end of the street. And I go, now, why are you thinking of moving away from this? Oh, well, I'm not sure. And anyway, the more we talked, the more they said, you know what, we're kind of like, our home is like the family headquarters. And maybe we really don't want to go to a 2-bedroom apartment or condo. And we'd rather stay in the home. Now, in their case, this guy was a disabled veteran, so he didn't even have any property tax. He's only paying $100 a month for insurance to stay in that home. And his idea when he called me was to go buy a condo and be making an $800 a month payment on the condo plus $350 for HOA. Now, how's that a good idea?
Yeah,
it's not.
Yeah, HOA. Don't get me started.
Yeah, not to mention it was nowhere near where his home is.
Patrick, a lot of people are wondering a lot about, what the cost of a reverse mortgage may be. Tell us, really, what is the cost of a reverse mortgage? Is it very expensive or is it prohibitive? I mean, how should we go about thinking about paying for a reverse mortgage? Does that come out of pocket? Explain to us a little bit about this cost.
Well, the good part is, like any normal mortgage, you're going to have closing costs. And you're going to have, lender margins. There's one other element of cost called mortgage insurance premium, and that's charged by HUD that insures this loan so that we can give you a loan that you don't have to make payments on. So these are all required. So the fees on a reverse mortgage are slightly higher than they are on a regular mortgage. Sometimes, just depends. And, again, this is something we have to look at your individual case to see. On the other hand, when you don't have to put any money up front. I mean, we can put this all on the loan, and of course, the nice thing is, yes, these are fees that you have to pay, but guess what? Your house goes up in value every year too. So a year later, your house may be worth enough money to cover all those fees in 1 year, the extra, appreciation value. So, yeah, I mean, generally the rates that we charge are competitive. They're pretty competitive with what you get in a normal mortgage. They're almost the same.
So Patrick, I know you just mentioned about the cost. Is there an average cost that people could expect? I mean, is it 1, 2, 3, 4% of the loan? I mean, is there a certain average cost that people look at and say, hey, here's what your closing cost is going to be approximately if you're doing it?
I would say that because HUD charges an insurance charge of 2% of the appraised value of your house, that a reverse mortgage will cost you 2% more than a conventional mortgage to get started, because that's just what it is. Okay. But it also, it has all the benefits of not having to make the monthly payment and, being able to stay in the house for 30 years without making a monthly payment if you want. And that 2% is a 2% fee that you pay upfront, 2% of the value of the house, and then there's 0.5% per year. And that's standard for all reverse mortgages. Doesn't matter which company you're with.
Is there any type of out-of-pocket expense that a person would expect if they're doing reverse mortgage? Any type of out-of-pocket expense that they are going to have to pay and it can't be rolled into the mortgage?
Well, everything can be rolled in, but generally there's you have to go to counseling, and a 1-hour counseling session from an independent counseling company is going to cost somewhere between $125 and $175, depending on the one you choose. We also have to have an appraisal, and it's going to run somewhere between $500 and $625. Usually that can be put into the fee. So most people pay the $125 for the counseling up front, and they put the appraisal part of the fees. And, every now and then we'll have some special where appraisals are cheaper, or we pay for part of them, or something like that. But it's minimal fees to actually, get it and apply for it. And, then we, of course, we'll see what happens in 2 months.
Okay. Well, hey, Patrick, that's our time for today. I appreciate you spending it with us again. Hey, I want you to come back, and I know a lot of people have thrown this question at me. Come on, Carson, there has to be a downside to this, or maybe who should not get a reverse mortgage. I want you to come back and maybe explain to the audience, those who may be considering this product tool as you continue to explain it, who should not do it. So if you would come back and join us for that and just let us know, hey, here's some people who should not consider reverse mortgage. That would be great. Could you do that for us?
Sure, absolutely.
Absolutely. Hey guys, we're going to have a link where you can get in touch with Patrick if you're considering a reverse mortgage. Just have the conversation. I think it's always important to be educated and not be frustrated about some of these things that are out there that may be utilized for your benefit. So Patrick, once again, if you want to tell people how to get in touch with you, we'll have this information in our description below. But if you want to just go ahead and tell people how they can get in touch with you if they are considering a reverse mortgage.
Sure. It's, my name is Patrick Kerwin, and my email is pkerwin, PKERWIN @aag.com, or you can just call me at 214-415-3773.
All right, Patrick. Thank you, sir. And we'll look forward to having you back again.
All right. Thank you.
You're welcome. So I really hope that this video also gave you some more insight as it relates to reverse mortgages. Please remember that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, tax advisor, and/or estate attorney when it comes to your own personal financial needs. And also, if you are looking for a fiduciary financial advisor to help you with these types of complex matters, please feel free to click on the link that's provided in the description below and learn how you can become one of our high-value clients. For more information on this particular topic and any other topics that we've discussed in our prior videos, feel free to reach out to our office and/or leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.